Good morning, everyone. Today, I'm going to talk about one of the most significant economic conflicts in recent history, the U.S. China trade war that began in 2018. I will explain why it started, how it affected both economies, how recovery happened, and what the future holds. Let's begin. A trade war happens when countries impose high tariffs, taxes, on each other's imports to gain economic advantage. In 2018, the U.S. and China, the two largest economies in the world, entered the biggest trade war in modern history. The U.S. accused China of unfair trade practices and imposed heavy tariffs on Chinese goods. In response, China retaliated with tariffs on American products. This wasn't just about economics. It was a battle for global economic leadership. But what caused this trade war in the first place? 1. The U.S. trade deficit with China. Every year, the U.S. imported much more from China than it exported. In 2017, the U.S. trade deficit with China was $375 billion, meaning the U.S. was buying more from China than China was buying from the U.S. The Trump administration wanted to reduce this gap by imposing tariffs. Technology theft and forced technology. Transfer U.S. companies that wanted to operate in China had to share their technology with Chinese firms. The U.S. accused China of stealing American technology and using it to build its own industries. 3. The Made in China plan. China's government had an aggressive plan to become a global leader in advanced technology. The U.S. saw this as a threat and wanted to slow China's technological rise. Intellectual property, IP theft. The U.S. accused China of copying American products, patents, and trademarks without permission. Many Chinese companies were making cheap versions of American products, causing losses for U.S. businesses. To stop these issues, the U.S. imposed tariffs on Chinese imports, and China fought back with its own tariffs. Between 2018 and 2019, both countries kept increasing tariffs, leading to global economic uncertainty. 2018, the trade war begins. The U.S. strikes first. March 2018. The U.S. imposed 25% tariffs on steel and 10% on aluminum. July 2018. The U.S. added 25% tariffs on $34 billion worth of Chinese goods. Eventually, tariffs expanded to $250 billion worth of Chinese products. China retaliates. China responded with tariffs on $34 billion worth of U.S. goods. China targeted U.S. agricultural products like soybeans, pork, and wine, hitting American farmers hard. 2019, the trade war escalates. The U.S. imposed tariffs on an additional $300 billion worth of Chinese imports. China countered with tariffs on $110 billion worth of U.S. goods. This created huge financial losses for businesses, farmers, and manufacturers. The trade war shook global markets, and both economies suffered. This trade war caused major damage to both economies and the global market. Impact on the U.S. economy. Higher costs for businesses. Companies had to pay more for raw materials. Farmers suffered. China reduced purchases of American soybeans, hurting U.S. agriculture. Consumer prices increased. Tariffs made Chinese products more expensive for U.S. consumers. Impact on China's economy. Slower economic growth. China's GDP growth fell below 6% for the first time in decades. Declining exports. U.S. tariffs made Chinese goods less competitive, companies leaving China. Foreign companies moved factories to Vietnam, India, and Mexico to avoid tariffs. Impact on the global economy. Global economic growth slowed due to uncertainty. Supply chain disruptions affected industries like automobiles, semiconductors, and electronics. January 2020, the U.S. and China signed the Phase 1 trade deal. China promised to buy an additional $200 billion worth of U.S. goods over 2 years. The U.S. stopped imposing new tariffs but kept existing ones. However, the COVID-19 pandemic disrupted global trade, and China failed to meet its purchase commitments. 2021-2024, gradual economic recovery. U.S.-China trade rebounded, but full recovery didn't happen. The U.S. moved manufacturing to other countries to reduce dependence on China. China focused on strengthening its domestic industries. As of 2024, the U.S.-China trade war is not fully over. The Biden administration kept most of Trump's tariffs in place. The U.S. is now limiting China's access to advanced technology, e.g., semiconductors, AI, batteries. American companies are reducing their reliance on Chinese suppliers. Future outlook. The U.S. and China will continue their economic rivalry. Global trade patterns are changing, with more supply chain diversification. Technology, finance, and national security conflicts may extend beyond trade. The global economy is deeply connected. The U.S.-China trade war is not over and will shape the future of global trade. Businesses must prepare for new supply chain strategies. The world economy is shifting, and we must stay aware of how U.S.-China relations evolve. Thank you for listening. I will see you in the next video.